Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. TradingView data suggests the S&P 500 could rise as much as 25% by the end of this year, but that's only if there's a complete red or blue wave in the U.S. government. Joining me to discuss is Crosby, General Manager of TradingView. And Pierce, it's great to see you again, albeit outside of the studio at MarketSite. Welcome back to Trade Talks.
Yeah, thanks, Jill. Appreciate it. Good to have you. It's obviously a different time than we were when we last met, but yeah, plenty to talk about.
Yeah, there's a lot to talk about, and I'm sure what we thought was going to be a big issue at the beginning of 2020 is very different than where we stand right now. And with the data in mind that I just referenced, we have to talk about election outcome predictions. What is it showing, and what kind of data are you aggregating?
Sure. So we pulled together data from dozens of sources that look at basically the spot price for the betting markets in the presidential election. So overseas, there's a lot of secondary markets that look at likelihoods of all sorts of outcomes, and the presidential election is no exception to the norm. So we have a ton of data that we've been pulling together, and really what we can see is that there is a slight lead right now from the Democratic Party for winning the actual presidential seat, and so there's a slight kind of I guess outperformance, if you will, from the average. And yeah, I mean, likelihood, there's been kind of a downshift, if you will, for potential President Trump kind of taking back the White House for that second term. So, data clearly shows a pretty tight spread, but really with a slight kind of shift towards Joe Biden.
What could a split House and Congress mean for markets as compared to a full wave?
Yeah, I mean, what we've been looking at is kind of the correlation between a blue wave or a red wave versus a split House or a split Congress in general. Broadly speaking, what happens with a split Congress is a bunch of impasses in terms of getting anything substantial done from one side or the other. So the main issue with that is that without any kind of market confidence, we don't really see the types of moves that we can expect from having a full blowout either one way or the other. And as a result, the base case is we see a 10% rise, but with these kind of two extremes, if we see, a takeover of both House, Senate, and potential presidential seat as well, we do have estimates that put, the S&P 500 at 25%. Well, not just the S&P, but other larger markets, 25% up from today.
Yeah, and if we take a look at those larger markets in this chart that you have here with all the different comparisons, of course, seeing that Nasdaq outperformance through 2020, which really has been the story this year.
Yeah, I mean, the thing is even with the election, the Nasdaq really doesn't seem to mind the presidential outcome one way or the other. I mean, the entire year we've seen that the dominant thesis is that tech is strong, and tech is here to stay, irrespective of where we are with the pandemic, where we are with an election. And really, when you look at this chart, you can see that, the outsized kind of weighting that the Nasdaq has with the tech sector speaks for itself. Broadly speaking, I mean, beating every index around the world year to date, which is kind of what we've been looking at from kind of a forecast perspective based on, where we were back in February when you and I talked before. Since then, we've seen a meteoric rise of kind of the larger tech names that we all consider household brands. And one thing to keep in mind is that it's actually not just the mega caps, but if you look under the hood at the actual tech brands, and we'll talk about a couple of them in the future, we do see it's a widespread upshift because broadly speaking, if we are all stuck at home for a longer period of time, not just the majors like a Google or an Amazon are going to be successful, but that's actually going to trickle down into medium cap, small cap names as well.
Yeah, and let's talk about sectors that have exposure to this, and we'll kick it off with energy. Of course, certainly not one of the beneficiaries to the stay-at-home trade. There's just, not only was there too much supply in the system prior to COVID-19, there certainly is not the demand. And of course, that comes from corporate travel, which severely impacts the energy space.
Yeah, totally. I mean, perfect storm of sorts. And, even before coming into, a global virus pandemic that obviously shuts down the entire travel industry, not just auto, but airlines, et cetera. That was already a headwind that we had coming into this year. And then, compound that with the fact that we now have a unforeseen and kind of unforecastable event happening this year has basically caused most of the majors in oil and gas to not recover from the initial decline that we saw back in March. And really, there is no catalyst that we kind of have on the horizon to kind of make that snapback significant. And if you want, we can talk about the comparison, which is obviously renewables, where we do see a lot of strong interest. But staying with energy specifically, you know, it's very hard to see any potential positive outcome for the rest of the year based on the amount of supply that we still have in the market and this secondary wave of infection cases across not just the U.S. but around the world, and how that continues to kind of impact and degrade forecasts from the analyst perspective around, you know, global energy markets.
Right, and it's interesting that you bring up renewable energy, and should we get that blue wave, or at least Biden into office, then you start to think about the Green New Deal and investing into these newer technologies, which could be very interesting for that space.
Yeah, and you know, like I said, I mean, pulling up the broad index, it's the ticker TAN. It really shows a reflection of what people can expect from any kind of green wave, or you know, really a dominant blue wave thesis that includes some renewables components to a larger investment in infrastructure, right? Because I believe that, you know, broadly speaking, we will see an infrastructure deal, but where that infrastructure is actually, you know, trickling down and where the money is actually going is going to be a key contested discussion between Democrats and Republicans. If we have, again, a blue takeover, then we can expect a lot more of investments in renewables. And, you know, one thing to keep in mind is, you know, Kamala Harris's background from California, she actually has quite strong policy on green energy in general. And so naturally, there's some great overlaps there for renewables. And so if you look at the sector broadly, I mean, it's night and day versus oil and gas, right? So it really speaks for itself. I mean, it's a completely polar opposite chart. And, you know, it's amazing because, you know, stoic brands like Halliburton is an example. I mean, one of the biggest companies in the 90s that now trades at a huge discount to what we'd previously seen. And, you know, if we do have kind of a Republican takeover, there may be some potential snapback or, you know, performance, but broadly speaking, renewables is a much stronger base case.
All right, let's talk about healthcare. We have a couple charts here. We have, it looks like core healthcare, then of course telemedicine, which was a trend in place prior to COVID-19, but certainly accelerated as a result of it.
Yeah, well, so one thing that people were questioning is whether or not telemedicine would continue, you know, after the fact, right? So we have this initial spike, and then, you know, does telemedicine actually, you know, continue to rise as a reflection of, you know, potentially people going back to work or you know, cases falling? Telemedicine is definitely something that we see as a long-term thesis and not something that's just going to disappear, much like many of these tech names that we talked about. And additionally, yeah, core health, there's a couple firms, again, that have distinct potential wins if we do have kind of a Democratic takeover. And so those are names that you definitely want to be looking at in terms of just understanding, you know, the key beneficiaries, you know, whether it's Anthem, whether it's Core, whether it's a couple other brands that I can talk about more. But yeah, there's a definite kind of a weighting of these top names as kind of being the most interesting for the sector.
And Pierce, let's wrap up with payment providers as well, another one of those beneficiaries of the 2020 environment.
Yeah, so I love to point to, you know, again, trends that won't, you know, live or die based on the election. And I think that, you know, the election outcome is still a very tight race, and we want to keep that, you know, kind of top of mind. You know, we don't pick one way or the other. We just look at the numbers, right? And ultimately for tech, you know, one of the most kind of interesting brands that we've seen, you know, continue to perform over the past, you know, 8 to 10 months has been PayPal. One of the things that people really don't pay attention to is just how deeply embedded PayPal is within e-commerce. And, you know, we think of something like a Square as being heavily weighted in retail, where they have, you know, a very strong presence in whether it's coffee shops or other retailers. And, you know, kind of obviously this is a huge kind of impact on their business because we have no foot traffic, we have no kind of retail business overall. PayPal still, because of their legacy as, you know, kind of the #1 provider for e-commerce and the spin-off of from eBay, does have a lot more room to grow, and the numbers that we've seen in the past 6 months really do reflect that over the last 2 quarters. So coming up on the end of this month, we'll have numbers from PayPal as well, and we can expect to see quite strong performance. It's definitely one of those brands that gets looked at less just because of how long they've been around, but really when it comes to payment services, it's very hard to move around without working with PayPal, if you will. So we're big fans, and the data really shows it on TradingView. I mean, people are clamoring around a couple of these kind of stoic names because they know they're not going anywhere.
All right, Pierce, great to have you with us. Thanks for joining us on Trade Talks.
Awesome. Thanks, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.